When we look at the ASX 100, it's very dominated by financials and resources, whereas when we look at the Small Ordinaries Index, it really is a very broad and diverse set of investment opportunities.
We invest in companies across information technology, healthcare, that have access to, Europe, America, and very long runways for growth. Investing in smaller companies, you get to see and invest in these businesses before they become household names and, enter into the major indices.
When we really drill down into the diversification and the opportunity set in smalls, I think there are a few layers to that. Firstly is just the sheer number of investable opportunities. There are literally hundreds, if not thousands, of companies that we can look at. And our job is to search through them and find where the mispriced opportunities exist. I think the next kind of facet to the small cap diversification story is around the sectoral breadth, and that really just speaks to the exposure that we get into a very broad set of industry sectors. And that's fantastic, because what it means is that at different points in the economic cycle, different sectors will be doing better and doing worse, and that gives us opportunities to find money-making opportunities regardless of what the economy is doing. I think the third and most important element of the diversity that exists in small caps is the diversity of quality. There are some wonderful companies that sit within the smaller companies investable universe, but there are also some poor quality companies. And you could describe it as somewhat of a minefield. That really is where our job comes to the fore, that we are tasked with searching through that opportunity set and finding the best businesses and avoiding the bad ones.
If we look at the small cap end of the market over the recent history, we've seen kind of in 2021, 2022, we saw a significant rate hiking cycle, which saw interest rates be lifted from nearly 0 to nearly 5% globally, and that put a lot of pressure on the valuations of smaller cap companies, but also on the customers, the consumers and business customers for these smaller cap companies, which materially impacted profitability in that period.
What's really interesting today is central banks around the world have already started cutting interest rates. That's interesting because we've seen in previous cycles when rates have started to be cut, that tends to act as a positive catalyst for small caps. The underperformance of smalls that we've seen for the last couple of years possibly turns back into an outperformance for the next little while. That provides a great opportunity, and we often describe running a small cap strategy over the last couple of years as somewhat like driving with the handbrake on. So, we think that there's a scenario over the next maybe 12 months where the handbrake comes off.
So for Lewis and I and the broader team, we consider ourselves bottom-up business analysts. We don't spend a lot of time on the macro, so the majority of our time is spent, looking at businesses and the management teams within those businesses, and the heavy focus of all our research efforts, engaging in experts, talking to competitors is based around that principle of research.
Our job is to find ways to make money in every and any macro environment. And the beauty of small caps is that there are always stocks and sectors which are doing well when, the macro backdrop might not tell you that is the case.
We search out and target those businesses we view as having the most defensible businesses, the strongest moats within the industries they operate, spend a lot of time with management of those businesses. And the second component is searching for, extreme value. So businesses that have been forgotten, businesses that are trading at, very low valuations, both within their industry but across the border, and then testing the market's view on one, the quality of that business, and two, the prospects of that business or the industry going forward.
We are a style agnostic manager. We don't pigeonhole ourselves as growth or value. We task ourselves with making money in any and every environment. And the way we do that is having a very good fundamental understanding of the businesses that we're investing in. We look to understand the earnings. We look to make sure that we're backing great management teams. And when we get that right, we can identify mispriced opportunities and we can exploit them. And that's what we do. So we're a team of 5 investment professionals managing the Pendal Smaller Companies Fund. That's really important because when you look at the breadth of opportunities in small caps and the rate of change that occurs in the investment landscape, a large team, we believe, is the only way that you can really consistently and effectively research all of those opportunities and remain across the opportunity set that sits in front of you.
In our team now, we have over 80 years of direct markets experience. And the most junior member of that team has had markets experience of 10 years and now 5 years within our firm.
And we think that really plays a very strong role in making sure that we understand the investments we're making and the risks that we're taking. So the Pendal Smaller Companies Fund celebrated its 20th birthday in 2024. That was a significant milestone. I think that's important because the fund has navigated many and varied economic cycles, and it's delivered excellent performance over those 2 decades or more than 2 decades now. The process that we've implemented has remained consistent over that period of time. Now, there are different faces in the team today than what there were 20 years ago, and there are different stocks in the fund compared with 20 years ago. But what is consistent is the way we go about making money. I think it's that consistency that really gives us confidence that we can continue to deliver the type of performance that we've been able to achieve for a long time now into the future. The fund itself invests in stocks that sit outside the ASX 100, and the smaller end of the investable universe is generally stocks that have a market cap of greater than about $400 million.
So for Lewis and I, being co-portfolio managers of the Pendal Smaller Companies Fund, we've had over nearly 2 decades each of, markets experience. And, for both of us, nearly 50% of that time has been within the Pendal group.
Whether the economy is going good, bad, or indifferent, there will be ways to make money, and our job is to find those. So we are relentless in our pursuit of finding those ideas. Ultimately, we make the most money when we accurately anticipate change. And the way that we achieve this is an absolute relentless process of deep fundamental research, very, very frequent corporate visitation. It's wearing out boot leather. Our team travels extensively. We would have done more than 200 days on the road in the last 12 months, and probably 500 or 600 unique meetings with companies, with competitors, with suppliers, with former employees, with the second and third tier of management in the companies that we invest in. We're always looking for that information edge, and when we can find that, we look to exploit that.
It's about doing deep industry analysis, meeting with experts, going on the road, meeting with the companies, visiting subsidiaries of the businesses, meeting with competitors, travelling, to faraway markets where those businesses operate in as part of that process.